Everyone, welcome to this video on oil. It's continuing from last week, and obviously with everything going on in the Middle East. A common question I'm often asked by people is what time frame to trade. And let's just look at our Brent. I'm continuing on with the Brent trade, the 15-minute bars here we saw, and the short signal. And this is where we are with that. And that's been carrying on from the previous videos that I've already done on our Telegram channel. If you've not subscribe to the Telegram channel, then just go to pipspredator.com, useful links, and you'll see the channel there. One of the other things I want to do with this is just look at one or two of the other timeframes as well. The people, again, another question is, look, I've got a day job. How much should I monitor and so on? You can see that this signal, 8th of January, because 15-minute bars, and it's still on, and we're, what, 7 hours into it, 6 hours into it. If we go to the 30-minute bars, so my point is you can do this with a day job. If we go into the 30-minute bars, you've got a signal around the same time and still going lower on that as well. Okay, what I wanted to show with this is just a quick reminder for everyone, because we're in volatile times. Whoops, you got the signal there. The price is falling nicely. The stop loss is all marked here. Remember, I prefer stepped stop losses. In other words, as this price, say, moves down to here, then we would move that lower. Now, most brokers automatically do that for you. If they don't, look at my video on step stop losses and find a broker that does. We can help you with that if there's an issue. Whereas a dynamic trailing stop loss, what it would have done is move this down and would have mimicked that position, and if this moved back, it would have stayed flat because the stop loss is only moving one direction. Obviously, now this is the point where we add to the winner. Entirely up to you if you want to add to positions. That's a more advanced, complicated strategy and to make more money. And I've done separate videos on that as well, which you find on the Telegram channel. You'll find on pipspredator.com. You'll find in the 12-week course, which you find through pipspredator.com. I know there's a ton of material with trading that I provide my apprentices, but the reason I want you to know all of this, it's up to you how much you take on board. The reason I want you to know all of this is because obviously it's incredibly useful. Okay, so that's where we are with the 30-minute. Just going backwards and sort of how we got here, thanks to Mr. Trump. We had a buy which came in thanks to the missile strike from the Iranians, which at first led to some escalation. But as I said on the Telegram channel, I think both sides are looking for a de-escalation. And around the time Trump speaks, you will see selling off. And that's something which we've seen. That doesn't mean we're looking to trade that without a signal. We want to wait until we see signals, and that's sort of our critical point as things stand on the 1 hour time frame. That has, because tensions have eased, that has got in. So you might say, well, you got in a bit late. No, this is a higher probability trade confirmed by our multiple indicators across multiple time frames. So that's where we are short. And he said, well, why didn't you go short right up here? You know, well, we're not in the extreme short-term time frame trading, and that's why we didn't do it all the way up there. We're in the higher probability trading business. What I also want to show you is if you really wanted to be ultra short-term, let's just go to the 5-minute bars. It's not something which we did, but let's say you went to the 5-minute bars. You would see this. Okay, let's have a look. What would you see? Let's drop back a bit on Brent over that time frame. Here we go. That's a good opportunity to see, and seeing what picked up. Well, you would have the buy, and yes, you would have picked up the massive, huge rally. Yes, you'd have the sell signal, which comes in a lot closer to this high. Now you might say, oh, why aren't you selling really? Well, again, we're in the higher probability trade business. So that would have been a good one. This would have been great. These two, well, these three went nowhere in the sideways market, and that's fine, because though you would have made no money and wouldn't have lost any, but you would have made a killing on that rise and on this fall. That got you nothing. This got you nothing, and then this one got you another killing. Great. So you can see sort of the ratio of good quality trades as well. You get a good quality trade, 1, 2, 3 over there, which more than make up for 3 trades which are 0 and 3 trades which were small losses. Okay, so you might think, well, wait a minute, 3 big wins and 6, which really got you nothing, that's a poor ratio. That's like 30% odd. Guess what? On a worse scenario, you will have 30% winning trades producing what? 80% of your profits will come from those in a given year. This is typical. We don't do 5-minute bars anyway, because we think the trade-off between the number of trades you're having to place and the frequency you're having to place them relative to the moves you're getting is too many, because every time you place a trade, you've got a cost. So you want to do fewer trades and have a bigger trends. And so whilst you've got these great wins, nice little one there and big, massive one there, we think the trade-off of having to do too many smaller trades isn't worth it. But this gives you a good indication of what happens if you wanted to do more active trading. It's not our preferred choice, as I've already mentioned to you, but it is. I know some of my apprentices, they love the 5-minute bars. They say, listen, Alpesh, I don't mind that I'm going to have some flat trades like this one, because guess what? These will make up for it. That's a massive gain. I love it. I would have added to my winner there. They'll tell me, they'll say I would have had a specific stop loss. So all the same rules apply. I love it. I want to do it. Anyway, let's give you a bit more insight into how our approaches are and across different times, and the trade-off between time frames as well, using the example of Brent, which I've been doing for the last few days, just to give you that additional education and information.